Hi, good day, everybody. I just thought I'll give you a brief intro on overall situation of the economy and the markets, especially coming from RBI speech from the governor, which just concluded. So as those of you who heard the speech and even those who are not, let me give you highlights there. There was a 50 basis points rate hike. The news that the governor spoke about the economy, both current and the future, was extremely positive, right? And I'd like to highlight here that India's currency, which is one of the main concerns, has depreciated only 7% against the dollar, whereas the dollar against major currencies has appreciated 14%. So already the rupee's performance is among the better countries in the world, number one. Number two is that the word recession was used frequently in the questions that I saw. But if you notice from the RBI governor's speech today, the services PMI, the manufacturing PMI, the growth in the various sectors, credit growth growing at 16%. All of them are good news from the Indian economy. Consumer demand, urban consumer demand is growing. Monsoon is at 7% above the normal. The reservoirs are full up to 85%, which augurs well for a good Rabi crop. So rural demand will then pick up with that. So I think the news has been very good on all the economy front as far as India is concerned from the RBI governor's speech. So I hope that puts at rest the questions that you have raised on a recession. Bear in mind that the recession which is being spoken about is in the advanced countries. And why is that situation there? Because the advanced countries post-COVID pumped a lot of liquidity into their economies, which caused a demand-side inflation in addition to the supply-side inflation. The Russia-Ukraine conflict further exacerbated this inflation from the supply side, and from a 1.5% inflation, the US went up to 9%. The situation in India is very different. Why? First of all, we handled COVID very well. In fact, we exported the vaccine to more than 100 countries. Number two, our Reserve Bank did not, unlike the other central banks, pump a whole lot of liquidity into the system. We were very cautious about the liquidity that we pumped into the system. The third point of view there is that the inflation in the US, which is driven by demand, in India is largely a supply-driven inflation, and 48% of India's CPI comes from food, another 15% from oil and transportation. So with this impact in mind, right, with the normal monsoon, the food inflation in India is also fairly tempered. So to that extent, Indian economy is not suffering from any recessionary trends, nor is they suffering from an hyperinflation trend, which is happening in the US and the European countries. So India, and I may draw your attention to RBI governor's speech on forecasted growth and forecasted inflation. For the next year, first quarter, that is January, February, March, is forecasted inflation at 5.8 and GDP growth to come about 4. But overall, India's current year GDP growth is projected at 7.1. But the good news is that when you go into the next financial year, that's April, May, June 2023, he's forecasted the inflation at 5%, well below their comfort zone, and he's forecasted GDP growth at 7.2%. So you can see that next financial year, India is going to be in a sweet spot of a moderating inflation, but a rising GDP growth. So this good news means that come the new year, I think we can not need to expect any more RBI hikes to control inflation. At the same time, the Indian economy will be on a strong growth wicket, and we will need to support that. So that point of view, I would just straight out before we take on the questions, because in that context then, right, in this whole world which is facing recessionary forces, India stands out as a shining star. While the short-term reaction to the Fed rate hike saw FIIs pull out money and hence cause a lot of volatility in our markets, you would have seen from today's reaction to the RBI policy that all this good news will make the FPIs ultimately return back to that country which has strong growth prospects, that's India. And the second is that while this rate hike caused money to flow out of India, probably back to the US because of the hike in interest rates and the cost of hedge funds money going up. The fact is, there's a lot of money which went to other commodity exporting markets like Brazil during the time of the commodity price rise from October to June. That flow will now likely reverse. And I expect that in the coming months, you will see FPI flows returning back to the Indian market, away from the commodity exporting market to a strong commodity importer like India. That augurs well for a stock market. domestic flows continue to be strong. SIP book of the industry is trading at well over 12,000 crores per month. So I would say that this is a good opportunity for long-term investors to buy in the market. And so the volatility over the next 2 months, as India's earnings season plays out, as the Fed talks about future rate hikes, there will be volatility in the market over the next 2 months. But any dips in the stock prices, to me, are a good buying opportunity for an investor with a medium to long-term perspective.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.